Now let's study this boomerang and this breaker structure. There's multiple examples of banker blocks, etc. So with this example, what are we anticipating? We do have a potential breaker structure. We've got bearish momentum, compression, bearish momentum, pullback, bearish momentum, pullback, bearish momentum, pullback, bearish momentum, pullback. We're expecting what? Bearish momentum, right? So the nature of the pattern is really indicating the bears are very likely to take out this particular low and continue going south. So whenever you're expecting a breaker structure, really study these schematics in detail. So first of all, if we go to the 4-hour candle, is this a breaker structure? No, it's not. It's just a liquidity grab. Look, it's just a wick. So at the moment, that to me is not valid. The next candle, however, we can see that's a very clear breaker structure. So what happened next is it continued going south. Okay, fair enough. We go to the 1-hour chart. What was the move that took out structure? Again, we follow it, broke structure, retest, and this is the banker block, the valid banker block. Obviously on the 4-hour, it looks like this. So we redefined the banker block, go to the 1-hour chart, and what can we see? This is the valid banker block. So let's go to the live markets. We can see that it retested the particular banker block that we just studied, and it also completed a boomerang of the 1, 2, and obviously the third tap, which we covered earlier. Price then obviously consolidated for a while, formed some very strong bearish momentum, and now it's forming a bit of a pattern here to go potentially short. This is in a bit of a range, but there's lots of opportunity here. So let's study this particular setup here to the right. So the setup, and what can we see? So again, similar scenario. There's structure here. It got taken out by a banker block at this area, right? Wasn't this candlestick here or this candlestick here, right? As you can see, it was clearly this momentum. So we need to study the momentum that took out this previous structure. So let's go to the 15-minute to get a clearer picture. And what can we see? Very textbook banker block. It was the move that took out structure, dropped to the downside, took out structure, pulled back eventually, and it retested the banker block to go short again, right? So textbook stuff. So this particular trade would have been a pretty decent trade if you were just trading banker blocks by themselves, right? Pretty decent trade. And your exit minimum as a TP1, always go to the most relevant TP1, the previous structure of the previous leg. Still, how much is this? This is a 5-6 trade. Would I have taken this trade? No. There is no boomerang here for me, as you can see. It's inside of the pattern, and this is no boomerang, right? There is, however, a bit of compression, which is fair enough, right? This is a good compression entry, but the boomerang is not valid because it's inside of the pattern. So for me, it's not valid. Had the banker block been up here, right, then this is perfect because we've got 1, 2, and then 3 on the boomerang. Then we've got 1, 2, and then 3 on the boomerang. So that would have been a good trade, but I still wouldn't have taken it. I need a minimum of 3 patterns. So if there was another pattern here, then I definitely would have taken it. So in this particular scenario, for me, there's no trades. I would only take a boomerang once there's confirmation if it's not outside of the pattern. So let's zoom in one more time to see what is happening with this current schematic. So for me, no valid trade here. We can remove this, and remove this. If we go to the live markets, this is the live markets right now, right? What can we see? We can clearly see there's 1, 2, and the boomerang. We've got 1, 2, and the boomerang. We've got the liquidity pool, the equal highs, a stop hunt of the previous structure using this liquidity pool. Perfect entry for a potential short. Very, very good trade. Did I take it? No, I didn't take it because it's only 2 patterns, right? I need a minimum of 3 patterns to take a limit order at the boomerang. And also there was way too much momentum. So this put me off. So I never took it. But the forecast was there for the members on YouTube and the live stream. If you check out the 27th, the 27th of October, or the day before, on the 26th of October at what, 1 p.m. Where is it now? 1 p.m. Or I must have been here, it dropped. So yeah, it must have been the 27th of October. And I did say the price is very likely to drop to the downside, then potentially catch a retest and then get involved in a short. And I did actually catch this trade, which I'm going to cover, in fact, in 1 hour and 20 minutes. And I did say, all right, drop to momentum, but I need confirmation, break of structure, catch the retest, get involved in a banker block. Right. So you can check this out on the live stream on the 28th of October. Currently recording this video now. So first of all, let's see what is actually happening. So valid entry at the top, but not high probability. So we need to wait for confirmation. Now, what actually happened? Price dropped to the downside, took out structure here caused by this banker block, as you can see. Now, this is the trick, guys. There's a few ways of trading the banker block. So in this example, wait, this is the wrong one. In this example here, right, there's two ways. We can trade the banker block of the 50%, which is fine, or we can use the very highest liquidity pool because price does like to go there a lot, right? So I decided to take this particular area because there was no pattern for me and it was just a bit choppy. So it's unlikely for price to form this pattern and then just sort of drop to the downside. It just didn't look right. And there was bullish momentum on the smaller time frame that I spotted. So I thought, valid trade, but let me just go to the very, very extreme. And on this occasion, it did actually play out. And obviously, in terms of the target we're using the very first leg of the previous move, 1 pip above the exit, and we're exiting 80%, and 1 pip below the entry, 1 pip above the stop loss. So in terms of redefining the banker block, again, this is the basic banker block of the 50%. And all you need to do is just look for any liquidity or any gaps at this area. And these are very, very juicy, high lucrative trades, right? And you can even redefine on any time from the 1 minute up until the daily time frame. So this was a pretty decent trade on the Boomerang. Now, in terms of the management, I held it towards this area here at TP1, which is 80% was banked. The remaining trade, however, which was at this particular area, obviously after bearish momentum, I tightened the stop loss towards this area. I'm waiting for this break of structure. So listen carefully, guys. I'm waiting for the break of structure down here. Once there's a break of structure, I can then move my stop loss to break even, but there's been no break of structure. I've banked 80% of my trades, so my psychology is completely fine. I'm very happy with 7R, and I've tightened the stop by 10%, 10-15%. So I'm fine. So price obviously dropped, it pulled back. I do not care what's happening, pulled back again. Then this morning, I checked the charts, I updated any relevant patterns, and I could see this particular setup. So when I saw this gave me some reassurance and confidence that, okay, it's just pulling back to a bank level here. It's forming a nice large pattern and an extension of this pattern here, which is a bearish momentum. There's a bit of a flag here, which failed, and then it forms into a larger flag, which is something that we cover in the early videos. So this gave me confidence to just hold a trade and just trust my setup. Then it eventually obviously dropped to the downside. And now my particular stop loss is now below this significant high, right? Below this significant high. But now I'm waiting for this schematic. I'm waiting for some equal highs. I'm waiting for a stop hunt. Once there's a stop hunt, then I'll be tightening my stop. And I'll just keep on doing the same schematic until I get taken out or until it reaches my long-term target on this entry, which is the start of the previous pattern, which is down here somewhere. So anywhere down here, start of the pattern, this will be my long-term exit for the 20%, which should be a potential pretty decent return of investment. That's a 25R. Now, is it likely to go there? I don't know. It's unlikely, but it does happen every now and again. I just need to follow the rules. And for me to hold a trade this long, right, for your psychology, I need to follow this rule here. I need to wait for the equal highs. And every time I see that on the 15-minute, literally just keep on moving it down. then it might be a bit of a stop hunt, maybe a boomerang cave, and then it rallies. I still do not care if it's rallying. I'm still taking trades on the way up and I'm still hedging it, right? But until I see another form of an equal highs, look for a stop hunt, then I'll be managing my trade like this. It's as simple as that, and just keep on doing it until I get taken out. So on that note, hopefully you guys enjoyed this example of the boomerang and the retest of the boomerang.